medical technology is making everyone a Terminator. She's literally going to live to probably like 300 years old. My name is Jason Castro. I help driven people get their dreams through opportunities that you didn't know were available to you, through education around money and finance, and a bit of mindset stuff as well. I want to share with you today a policy that we put in for our 8-month-old daughter. This is a similar looking policy, but I just want to go through the details with you. So there's a couple different types of insurance policies that maybe you're not familiar with. One is term insurance. That covers you for a certain period of time, something like a vehicle or mortgage or something like that. Second, there's permanent insurance, and there's lots of different types of that as well, but this one's a whole life. So it's an insurance policy with a bit of cash value inside, so a dividend that pays out inside of the policy. I'll get into that in a second, but let's go through the details. So this is a 20-year pay policy. So you only have to pay for 20 years for the policy, and then it's good for the rest of time, okay? With this policy, the base coverage starts at $118,883. So the death benefit, if something happened to her, would pay out $118,000. Next is critical illness, heart attack, stroke, cancer, something like that. Cancer is being diagnosed in people more than ever before. So we wanted to make sure she had a little bit of coverage for that to get better and treatments and stuff like that. So $50,000 in coverage for that. So for our daughter, it's be about $162.75. Things will change based on age and gender, obviously, if you're thinking about this for your little one. We added in a little bit extra here, $37.25. We wanted to round it to a nice even 200 that we can continue that a little bit extra going forward, or we can stop it, or she can take it over when she's old enough to do so. And she can even put more if she wants. Let's go look at the numbers. Okay, lots to see here, but please just stick with me. So you'll have age right here, 20 years. Also the year of the policy because she's less than a year old. You'll see premiums stop after that. This side, not so much of importance, but this is what I want to focus on. So this is based on a 6% dividend payout. So the company that we're insured with will pay out 6% approximately on average. That may go up and down depending on what's going on in the economy, but they've averaged around 6%. So we're going to look at these numbers. So you'll see also it ends there, but this little bit continues. That's just a bit of the extra that we put in. Annual dividend is $1,600. And then total cash value at age 20 will be $45,821. Not a bad little cash value built up. The death benefit is something now you can see slowly increases over time, is actually $380,663. Now, in today, that would be a nice little starter home. She might need a little extra coverage at that time to make sure she's covers her first home. But the way things are looking, she might only be able to afford a box in an apartment somewhere. We'll see. Or we'll probably have a place for her to move into when she's of age. Let's continue on to see what happens as she gets older. All right, now let's think retirement, because this is where things get a little cooler. So age 50, let's take a look at the numbers. So cash value is $323,997. So almost $324,000 in the cash value. The annual dividend now is $8,200, which is really, really cool. And then the total death benefit here is really awesome. $1 million. So she's probably has a family at this point, whatever she's doing, she'll have $1 million for her surviving family if something were to happen to her. If you go down to 65 here, you'll see dividend goes from $8,000 now to $19,000. So doubles the annual dividend is doubling. We have $754,700 and about $1.5 million in coverage. Let's go. Cool thing is she can utilize this cash flow, and I'll make another video if you're interested in seeing how you utilize the cash flow in one of these policies. Let's go a little bit further just because I think this is insane. Okay, let's go all the way into the future. 95 years from now, medical technology is making everyone a Terminator. She's literally going to live to probably like 300 years old. But this policy, let's take a look at 95. So over here, the annual dividend is now $85,000. Now, in 95 years, is $85,000 a lot of money? Probably not with inflation and things like that, but 85,000 is really good to start building up within this policy. Then you have cash value of $3.2 million, and a death benefit of $3.5 million. Now, obviously, there's regulations with these kind of accounts. The government wants to make sure it's not blowing up too big. That's why these numbers are a little bit different than the ones above. But those are all things we can talk about. If you're interested in something like this, feel free to reach out and we can chat about what that looks like for you and your family. I think this is just so cool, setting up generational wealth for not your kids, but your kids' kids, and maybe even their kids' kids' kids. Yeah, crazy.